Trivariate Research founder and CEO Adam Parker joins us here at Post 9. Interesting day. Got a mix of everything, from the data to earnings, and certainly these records have been getting our attention. Adam, how about you?
Yeah, I get why you guys get excited about things like 40,000. I get a little less excited just because it's a price-weighted index, and I don't even know if I could name the companies that are in there anymore, or all of them anyway.
We can.
I've heard of all of them, but you know what I mean? For me, I think making short-term one-month market calls is really hard. Okay, we've empirically tried to do that for years. It's kind of hard to do. Everyone tries to do that, or they try to, talk about equity risk premium, with bonds versus that stuff. Has almost no predictive value. So if you're going to have a framework, I think it's got to be much more about where do I think corporate profitability can go? What are the cyclical impacts on margins? What are the structural things that can make margins higher? What could AI do to productivity margin? It's like most of the debates I have investors. I did a dinner last night with 7 or 8 investors, and it was just all about where can growth and margins surprise to the upside, right? So it's more that I focus on. This stuff's all nice, but 40,000, I don't know. It could be the number of times I've been wrong about the stock market in the last 25 years.
I mean, we are also at the record. Let's be clear on the S&P
the market.
500.
Yeah.
But I do wonder what you think the market is essentially implying about the corporate profitability piece of it, and in particular, this sort of AI wave that's sort of dominating so many corporate budgets and everything. I looked at Goldman Sachs had a chart of you had the AI infrastructure plays, you have the AI implementation plays, both done really well, especially infrastructure.
Right.
Then you have the productivity side where companies talking about how it's going to help their regular business, not doing anything.
Right.
So I just wonder what the market thinks the payback on all this investment is going to be.
I think it's going to be massive. Personally, I think it's not surprising that the revenue beneficiaries act well at the beginning. You saw that with, next Wednesday, NVIDIA reports, but it was only a year ago that they gave you the biggest upward sales revision of any mega cap company ever. We have a chart where we tag every company that mentions anything related to AI in their earnings call transcripts, GPUs, large language models, and we look at their margins over time versus other growth companies that aren't mentioning those things, meaning the analysts aren't asking the management teams about them. And their margins are already starting to pick up a little bit. So clearly the revenue beneficiaries are on the path. Your point is a tough one on when do the cost beneficiaries. You've seen it in medical distribution. COR talked about it. I think companies like McKesson and Cardinal are starting to discount that they're going to benefit. So I think it's more on the come. Healthcare maybe more 1 through 3 years. Financials maybe 5 through 10. So I think there's a long wave toward productivity enhancement from AI.